Hello traders, this is Alex and I'm gonna explain a trade that I did today on the Qs. It was an iron condor, and also I'm gonna explain how to start a portfolio. So this is a neutral trade. I just posted it on TradingView, and as you can see, we make money as long as we stay between these two lines. These are our break-even lines. So if at the end of the length of this date, which is February 15, if it stays between these two lines, then we make money. And here you can see the explanation why I did it in terms of the capital efficiency and all that good stuff. And I'm gonna explain it right now. So let's go to the platform and check it out. Okay, so this is a brand new account with only $5,000, and as you can see, this is the trade I just made today. The QQQs, I sold the 147 168 and bought the 142 173. And the main thing that if I'm gonna start a portfolio, why stock or this ETF? QQQ is an ETF for the Nasdaq. So first things is I'm gonna start trading ETFs because they are safer in terms of the diversification if you compare it with a single stock. That also means that you can make more money with stocks, but it's more risky. So more risk, more reward. So let's see if we were gonna do this trade. Why I use QQQ? Well, first I want to diversify, and ETFs are a bunch of companies, right? But they are all equities. So at the end of the day, they are all correlated. So this is my micro overview. What should I use? And as you can see, if we go down, we can start looking at the different ETFs. For example, SPY is the S&P 500, QQQ is the Nasdaq, IWM the Russell. So these three ETFs are very highly correlated. So if I have three different trades here, three different strangles or iron condors, they will be basically the same trade. So the first step will be I'll only choose one of them. If I only have a $5,000 account, then I don't have that many options in terms of how many trades I can make. So I have to keep it very, very simple. And the first thing first, SPY is more expensive, as you can see. The SPY is the price is $256. So that's one of the reasons that I prefer the Nasdaq, right? Another reason is the IV rank. IV rank basically is telling us you're gonna get paid more the same option. So here we are in SPY, and let's say we're gonna do a similar trade with 38 days, and let's say I want to do the 20 delta strangle. I sell the 242 put, and again the 20 delta call, which will be the 268, and if I will be receiving $365 for this trade. And if I were to send it, it's telling me this account doesn't have sufficient buying power because it will be using almost $4,000. And as you can see, the amount that I have right now available for this trade, it will be $3,000. But if I buy the wings, let's say I decide to buy this wing, the 271, or let's say more similar, something like that, and on one side, and on the second side I'll sell this one. So now if I were to sell it, we will be only using $350. So and the max profit will be $154. So by buying those wings, I can make this trade, even though it's a kind of expensive, a $250 stock. But if we go back to the Qs, the one that we did the trade, and we choose to do exactly the same trade. So I sold this one. You can see this is the trade that I have. I sold this one. I bought the 142 put, and basically doing the same trade. I did it for 175, so right now I am losing $2. And the reason I chose these strikes is actually I prefer doing around the 20 deltas but because the Nasdaq has been rallying the last couple of days from last week, I decided to use a closer delta from the call side. So I am skewing to the downside. If you see, this is the expected move, this brown line, and the green line is basically where I make money. So if you can see, I have a little bit more space to the downside because I skew it, and the max loss will be $325, and my max profit will be $175. The other thing is that those three ETFs are very liquid. In terms of the positions, the first thing is that I want to diversify equities. I want some kind of other uncorrelated assets. And what I did is I made some working orders. They didn't get filled, but here an example of other non-correlated strategies. FXB is a pound strategy. It's an ETF that is using currencies, the pound. And if you can see here, the IV rank is also very high. The only bad thing is that it's not as liquid as the other ones. The GDX is a gold type of ETF. It's basically a sector gold miners ETF. But this one is cheaper. As you can see, the price is just $21. So here I am able to try and do a strangle. So I don't need to buy the wings because I can do a naked trade. But I didn't get filled. These are the prices that I tried to get filled, and I didn't. I left that from the morning all day, and it didn't get filled. So I'm gonna leave it good until cancel. And another one will be TLT, which are bonds, and again the same thing. This is very liquid, and the price is similar, around 120 or something. So I usually try to have those type of combination. Usually some type of currency. I also add oil in terms of energy. So if we go back again, let's show the other account that I have. So this is the account that I'm showing. It only says 3,000 option buying power because I'm having these working orders. It's counting them as capital required. So if I press here, for example, as you can see, I don't have any trades there, but it's kind of using it, the calculations. At the end of the day, this will be the amount of capital I'll be using. And this is a $5,000 account. So in other words, if you divide that in 5,000, it will be less than 40% of my total capital will be if I got filled in all of those. And if we add this other, let me close those working orders. And again, here you can see today's trade. This is a trade that I did today. This is this same trade. So it's a real trade that I made. And the negative delta is basically telling us that for every dollar that it goes down, that ETF or that stock, I'll be making $4. So if it goes up, then I'll be losing $4. And the theta will be how many dollars per day, in theory, I'll be making for the premium that I'm selling. So as you can see, I'm losing. I lost today. I'm down $2 year to date because I sold it for $2.75, and it's right now at $2.77. That's why it says I'm down for this year in this account. In this other account, the numbers are bigger because it's a bigger account, and that's why you see a bigger number in theta, and of course in terms of year to date and on the option buying power that I have right now. So if I click here, these are other trades that I have, and you can see I can combine all the portfolio, and actually it's very easy to use. If I don't want to see this cues, I can deselect that one and it's not there. But anyway, what I wanted to say is the different type of diversification. Here, these are futures, so those are bigger products. But just to give you an idea, these two are currency. This is the pound and the euro. These are oil, these are for February contract, and these are for March contracts. ES is the S&P 500. GC is from gold, and SI also silver. So these two, I'll classify them as metals, and I treat them as the same trade. And ZB is bonds. And UVXY is actually volatility, which I also count as another type of trade that I always want to have in my portfolio. So hopefully this was helpful. I'm gonna try and get this filled for the next couple of days, and keep it up and try to manage them if I have to. The good thing about this is that the management that I'm planning is gonna be very, very easy. And if I want to close it, it's very easy. I can just wait to close when the profit gets to 50% of what I get. If I click here, I can it automatically will give me the mid price. I can put a good to cancel order, just review and send, and that's it. I don't pay commission. I won't pay commission for the close, only the 54 cents of fees. So that's a nice reason to have an account in Tastyworks. Then send order, and there it is. It will be active for the next trading session. So hopefully that was helpful. If you have any question, just write on the comments. If you like this video, hit the like button, and if you want to subscribe, don't forget to subscribe. Thank you very much, and take care.